Fabio Balboni is the European economist at HSBC. He is our guest host this morning. Fabio, when it comes to the ECB, some could say it was going to be a snooze fest. But in terms of growth, you would say whatever problems the Fed might have, Mario Draghi's are a multiple version of that. What do you mean by that?
Well, the problem that the ECB faces is that they're trying to convince the market that everything is on track, that they can start hiking rates after next summer, however you might want to define summer. And obviously, at the same time, they are seeing that growth is actually slowing. We had some pretty bad numbers yesterday on the PMIs, and the market just doesn't believe them. And we also don't believe them because we think that it's going to be incredibly hard for the ECB to start a rate hiking cycle in the moment in which the Fed might be done. Global growth might be rolling over. And on top of that, when inflation is just not coming through, because when you look at core inflation, it's actually still stuck below 1%. So I think Draghi today faced a mountainous challenge in terms of try to convince the market that everything is on path. And to some extent, I think they might have to admit that actually risks to their growth outlook are skewed to the downside rather than balanced, as they've been telling us so far.
So, Fabio, you expect a 15 basis point deposit rate rise next September, but you expect it to be a one and done. Why?
Well, simply because we think it's going to be very, very hard for the ECB to start hiking rates when the Fed is done. And if they try to do that, they'll be in the same situation that the Fed was in 2014, 2015, where the euro does the job for them. And the last thing the ECB want to do with slowing growth is a stronger euro, because that's how you generate some growth in Europe. So we think the ECB will struggle. They might just about get away with one hike before Mario Draghi leaves, a sort of a farewell gift, but we think they're going to struggle a lot. So we might be stuck with negative rates heading into possibly the next European recession.
Fabio, you say that the currency will take the slack there. Is it your base case that the dollar's inexorable rise continues and the euro fades as a ballast, very briefly, in 30 seconds?
Yeah, absolutely. That's exactly what we see, because that rate differential, because it's so high and persistent, we think it will continue to drive the dollar higher. So we think the dollar rise has got legs.